The global financial landscape is undergoing a significant transformation. The BRICS Plus nations are not just emerging economies. They're actively reshaping international finance. But how are they challenging the dominance of institutions like the International Monetary Fund and the World Bank? Let's delve into their strategies. In 2014, the BRICS countries established the new development bank as a direct response to the perceived Western-centric policies of the IMF and World Bank. Headquartered in Shanghai, the NDB focuses on funding infrastructure and sustainable development projects across emerging economies. With an initial authorized capital of $100 billion, equally subscribed by its founding members, the NDB aims to provide an alternative source of financing, emphasizing equality among members without granting veto power to any single nation. Complementing the NDB is the Contingent Reserve Arrangement, another initiative launched by BRICS in 2014. The CRA serves as a financial safety net, offering liquidity support to member countries during balance of payments crises. With total committed resources of $100 billion, contributed by China with $41 billion, Brazil, India, and Russia with $18 billion each, and South Africa with $5 billion. The CRA aims to reduce reliance on the IMF's conditional assistance, providing BRICS nations with greater autonomy in managing financial emergencies. The ambition of BRICS extends beyond these institutions. In recent summits, leaders have discussed creating alternative payment systems to decrease dependence on the US dollar. For instance, in October 2024, Russian President Vladimir Putin proposed a BRICS grain exchange to stabilize food prices, while Brazilian President Luiz Inácio Lula da Silva emphasized the need for new payment methods to strengthen a multipolar financial system. However, these initiatives face significant challenges. The NDB's capital is modest compared to the vast resources of the IMF and World Bank, limiting its capacity to finance large-scale projects independently. Additionally, internal differences among BRICS nations, such as varying economic priorities and geopolitical interests, complicate the development of a unified financial strategy. While the BRICS initiatives represent a shift towards a more diversified global financial system, experts suggest that these efforts are still in their early stages. The entrenched influence of the IMF and World Bank, coupled with the dominance of the US dollar in global trade, presents substantial hurdles. Nevertheless, the NDB and CRA symbolize a growing desire among emerging economies to have a more significant voice in international finance. The question remains, can the BRICS nations successfully challenge the hegemony of the IMF and World Bank? Or will these new institutions serve merely as supplementary players in the global financial arena? The evolving strategies and collaborations of these nations will undoubtedly influence the future trajectory of international finance. Share your thoughts in the comments below. Do you believe the BRICS initiatives can redefine global finance? Like, share, and subscribe for more insights into global economics.